9 Ps, it's a mnemonic, but as the list grew, even the P's in a mnemonic became hard to remember. So let me read them off to you. I've got them listed here. People, property, financing, spelled with a PH, paper, promotion, politics, push, pitfalls, and price. So let me explain each of these things briefly. People is first on the list, and it's probably as important as all of the other 8 Ps put together. Good people make for good business. Bad people always make for bad business. Good people can take a company that's a shell that has no assets and turn it into $1 billion company. Bad people can take a company that's got lots of money, a great property, has everything, and turn it into a nightmare. So people comes first. Now, this is a reason why, before you buy a company, if possible, you want to actually get the management so you can size them up for yourself and decide if these people are ethical, if they're competent, or if they're not. What you're really looking for is people that have a lot of experience, have a lot of technical knowledge, and frankly, have Boy Scout virtues. You want people, these 12 things, the Boy Scouts list, they've got to be trustworthy, loyal, helpful, friendly, courteous, kind, this type of thing. Those are the kind of people that you're looking for. You're not looking for white shoe promoters. So it's a long story, and it can take time to find out who you're dealing with. But track record is the best indicator. I'm not looking for somebody that got lucky sometime in the past. I'm looking for somebody that's consistently, because of his virtues and his knowledge and his experience, is able to go from one company or project to another over the course of years. And I like to bet on jockeys. These other 8 characteristics that I'm going to name, I'll call them the horses. But you need a good jockey, so people's number 1. The second thing is the property. First of all, an ore body is a mineral deposit which can be economically mined, okay? And over the years, and it depends on a number of variables, but when a prospector, and now they use helicopters and airplanes more than mules and pickaxes, but the chances of a mineral occurrence actually turning into a mine are about 1 out of 1,000, maybe less. So now when we assess the property, we have to look, is it big enough? Is the grade high enough? Is it located in the middle of nowhere so that when you're putting in a multi-million or $100 million plant or billion-dollar plant, you're going to have to bring electricity, water, earth-moving equipment, roading, all these things. Many things. The nature of the deposit, other chemical elements that are there with the gold or the silver or the nickel or the uranium. So this is a very complex area, and it takes a lot of reading and a lot of field experience to be able to determine a good property from a bad property. But this is part of the education that you're going to have to give yourself to become competent. After property is financing. You got good people, got good property, no money in the bank, nothing happens. So can the people, based on the property, raise enough money on reasonable enough terms that you as an investor is going to make money? What are the terms? Is it going to be debt? Generally not a good idea in the mining business, because from the time that you find a deposit, best case to the time that's put into production. Today, because of regulatory and other barriers, It may take 10 years. That's not usually a good idea. But anyway, financing. Can they get it? Will it be enough? Paper. Number 4, who owns all this stock? How much stock does the management own? What do they pay for it per share? Is it locked up long? So you have to look at the financial structure of the company when we look at paper. After they've got the money and financing, how is the company structured paper-wise? The 5th thing, promotion. Let's say we've got all these elements together now. Good people, good property, enough money, the financial structure, the paper is good. How do we tell the story? Because remember, we're talking about a publicly traded stock, and we don't make money unless the stock goes up. So can they tell the story? Now, one of the problems with the mining business, and Mark Twain put his finger on this in the 19th century, he said, a gold mine is a hole in the ground with a liar at the entrance. And it's developed a bad reputation because since nobody knows what's really there, a con man can spin a great story about how everybody's going to be a billionaire if they buy the stock. This is called promotion. Everybody buys. It gives the insiders a chance to sell, or if they're ethical people, it gives them a chance to raise money at higher levels to further reward early shareholders. So promotion is a double-edged sword. It's necessary, it can be a good thing, or it can be a bad thing. Next is politics. In today's highly politicized world, you can have all of the factors that I've just mentioned, and if the politics are bad, the guys that are running the country, or the state, or the county, they can throw huge stumbling blocks in the way and stop everything. So it's critical that you look at what the ambiance of the local jurisdiction is. I mean, you can go from some countries, typically in the third world, where they'll steal the property directly. Well, it doesn't happen too much anymore because these people have learned over time that they can't run a mine. They'll run it into the ground if they actually confiscate it. So they try to do these things indirectly through taxes, imposing royalties on you, necessitating paying inordinate amounts of money to local workers and hiring their all kinds of political considerations. So you've got to analyze these things. Part of the political situation are what are the NGOs, non-governmental organizations, there are thousands of them in the world, going to do that want you to, save the whales, save the bees, save the trees, save that snail, don't do anything. Local indigenous peoples groups are either running a shakedown sometimes or, have some tribal beliefs. All these things can stop you. So in addition to the things I mentioned, politics are critical. Next is push. That means what's the catalyst that's going to move this stock? You're doing all these various things. Is there something that's going to actually ignite the fire? Because remember, the reason we're in this is not just to bring good things to life, bring natural resources to the world at large. It's to make money. So what is there that's going to set this stock off? Is a major brokerage firm going to write a major report on the company and bring in all kinds of investors from outside? Is it possible that the bull market's going to start tomorrow morning and everybody wants to get it? There's all kinds of things. We're looking for a catalyst. This is one of the least important things, but it's good to have, because when I buy one of these stocks, most of these companies are burning matches. They don't have income, and when they get income, it's often irregular. So we're looking for something that's going to make whatever's going to happen tomorrow morning, not 10 years from now. Pitfalls. After looking at all these things, you got to ask yourself, just assess the whole over situation, the things we've covered. What can go wrong? And of course, with anything in the investment world, 1,000 things can go wrong. So it's a question of assessing what are the chances that hotshot CEO, good guy, trustworthy, great guy, competent, is he too old? Is he going to die? Has he got family problems? What are the chances of on a pit having been built and the sides collapse. You've got to look at all the things that can go wrong. Not because they will, just so you're not surprised when one of them does. And the last thing is price. And here I'm referring to the commodity in question. What's the price of gold going to do? Go up, go down? Nickel, uranium, silver, copper. There's 92 naturally occurring elements in the periodic table of elements. And there are mining companies, probably about 20 of those elements are actively mined and have publicly traded companies. So you have to form an opinion as to what the future price of that particular element that your company is dealing with is going to be. And it's very interesting, crystal ball gazing. You're looking at the technology and wars, all kinds of things that can control the prices of the elements, but this is a major consideration. So those are the 9 things, and put them all together, take them apart, study them. Try not to do anything unless you can see an answer to each of these questions.